Boom. Boom shakalaka. Oh man, I'll tell you what. You stuck with me again. That's 2 weeks in a row. You got just me, myself, and I, but we do have a great one for you folks. I'm flying solo tonight. It's my better half there, Crypto Bronze. Bronze is off again tonight. It looks like he's caught something, and of course, we want him to be super strong before he comes back and returns. And we're looking forward to having him back next week. But stuck with me this week again, and we do have a good one for you tonight. Now, we are before we get started, of course, don't forget to like, subscribe, and comment below. Of course, every little bit helps there, folks. So we appreciate you. Now, tonight we'll be getting into the Bitcoin chart as per the norm. We are going to be talking about the CPI report that came out today. That is kind of big news for today. Wasn't exactly horrible news. So we'll be talking about that and taking a clip from Squawk on the Street. And we're going to be taking a look also, wrapping it up with some future chart reviews. These are a lot of reviews that are kind of hot on social media at the moment and focusing in on all the good that's going in and going on rather in the Bitcoin space. So why don't we get right into it, folks? Let me go ahead and pull up the Bitcoin chart as I normally do. Bear with me for a moment. And we're going to take a look. I'm sure you'll see we're still continuing to go fairly sideways, kind of stuck. I feel like we are stuck in between 29 and 31. Let's see if we can get out of this. Let me go ahead and pull this up. And here we go. All right. So taking a look at it over the past few days here, let me go ahead and expand this out as best I can. I'll get this nice and big so you guys can see it as well. Not that big. You can see we're still on that kind of downward slope here. Now, not to say that that's necessarily a bad thing because we may have actually leveled off. But the trend does continue. And for the most part, we're staying pretty steady between 31 and of course our lower point here of call it 29. And the question is, are we going to go ahead and stay on this? Is this we have our support down below and our resistance up above? I think for the most part is as we continue to remain in this space, all of the altcoins are going to stay fairly strong. It's when Bitcoin starts to take off that we should start to see this draw away from altcoin or altcoin season and move towards BTC and potentially all-time high. Now, we should see BTC when it hits that all-time high. That's when you want to start to focus in on, or when we could try to call the all-time high. Start to get back into the altcoins and ride out the rest of the season into the sunset. I do think that we're kind of hitting bottom, and we should see a bounce from here. This is, of course, as always, folks, never financial advice. What do I know? Can't see the future, and you know, I am not a trained financial advisor. So, with that all said, I think it's up from here, folks. I don't think that I think we are. I don't know that we're even going to go sideways. I suspect we're going to go ahead and bounce off this lower resistance here, and it's up from here. You've heard it here, folks. First, up from here. That's where it's headed. Now, the question is where. Well, I think that's anyone's guess, but upwards toward 100,000 is the potential by the end of the year. We'll take a look at some of those predictions in a few moments. But with that all said, let's get back to some of the news that's going on in the space. Now, the CPI report came out today, and This is the big news for today, and of course that's the consumer price index, and it wasn't horrible news. And I think though a lot of folks in the space pay attention to CPI. Of course, a lot of folks in the traditional markets pay attention to it as well, and it does bake in some price ahead of time. And of course, if it's better than expected, then what you should see is the stock market start to increase as well as the crypto space. Of course, if it's worse than expected, of course, then it's going the opposite direction. Well, I feel like it was a bit sideways today. Now, overall, the markets kind of did end up a little on the red side, and we did see a little bit of a pump early on, but it's kind of moved on. We're kind of lackluster at the moment. As you saw, we continue to go sideways. Hit that mid 29, call it 29.4, 29.5. But I do think that we have some pretty strong resistance in that space, and we're going to go ahead and continue an uptrend from here. We, the CPI for the month of July rose 3.2%, and that's a slight acceleration from June's 3% on an annual increase. Now, prices were up over 0.2% in July, and that's from the previous month, of course. And the line for June's zero point 0.2 month over month was sideways. So both measures were roughly in line with economic forecasts, which is why we didn't really see much of a movement in either the traditional markets or in the crypto space today. We have a clip here from CNBC's Walk on the Streets. I don't know, you guys may be watching this, you may be not, but I do recommend if you are going to be in this space that you please pay attention to the traditional markets because they do go hand in hand. Let me go ahead and pull this clip up here. You love them or hate them. I think that Jim Cramer, who is part of Squawk on the Street, always has something to say about, well, pretty much everything. There's always something going on. Now, some say do the opposite of what Jim is doing, and I kind of tend towards lean towards that as well. But to see, just to get a little bit on his take here, let me go ahead and pull this clip up, and we'll kind of narrate this just a bit. And let me just make sure this looks good. Looking pretty good. Let me see if I can get this widened out just a bit. All right, here we go, folks.
Let's begin with the market's reaction to CPI. 10-year did get down to 3.96, Jim. That's going to be the lows of the month.
Yeah, look, these are numbers that you want to see if you're a bull. Obviously, Robert Frank had a fantastic piece this morning about how rents are the only sticky part. I mean,
right, so consumer price index, month over month, estimate was 0.2. Well, they hit it. So that's why we're not really seeing a significant increase. Take a look at the future changes. This was right before the market opened. It wasn't too much, but we did see a bit of an uptick both in the crypto space and the S&P space, but it was taken back as the day progressed. And let me just make sure you guys can hear this because I don't have my faithful sidekick on here. So I'm just going to stop that for just a second. Last thing I want to do is play this back at the end of the show, just find out you guys couldn't hear a gosh darn thing. But it looks like you can, so we're going to go ahead and just keep on rolling, folks.
I mean, frankly, we could easily counteract that by saying earlier this week there were a number of articles about how we've overbuilt apartments and they're about to come on. So, David, I mean, if that's the last sticking point, then I think the Fed can't declare victory because that's that Burns problem where you declare victory and then it comes back up. But I mean, the Fed, I think, should do one more just because you want to be sure that the vampire doesn't rise up.
Well, I don't know what he's talking about, a vampire rising up, but I think what he's trying to say is that, well, if I were Jim, crawling into his brain, We want to make sure that inflation overall is headed in the right direction, continuing to head in the right direction. So take that stake and plumb it right in the heart of the vampire and raise. You're going to want to go ahead and take a look at inflation and raise those rates one more time. Now, that's Jim's guess. I don't know. Jim's been on here for quite a while. You think he's a vampire? I don't know. You tell me. Kind of looks a little shady. All right, folks, moving right along.
But this is going Jay's way, and I told you it's not a soft landing or hard landing. It's a glide. And the people who do that soft landing, hard landing, the dichotomy, I think that they're fanciful, and they're thinking smacks more of fiction than fact.
Well, it will be welcome.
Sounds to me like Jim is drinking a little bit early this morning.
News to those who are long, for example, FANG, or what we like to call the Magnificent Seven. It's not been a good week for the NASDAQ.
No, well, look,
we're down, I think, what, 4%?
Right, and look, there's a negative story out there for NVIDIA, which is that one of the customers is saying that that they can't deliver all the chips. Now, NVIDIA's in quiet.
Well, now we get into the market here, folks, and we're really not interested about any of that. But, I think that overall it does make an interesting point, right? There is a correlation between CPI and inflation, and having to make sure that CPI index starts to drop and get in the right direction in comparison to inflation is important where the futures are going to lie moving forward. I think that is something that we need to continue to pay attention to, that you need to continue to pay attention to. And what we're hoping for is a real rally based off of some really positive data. Now, that positive data remains to be seen. It remains to elude us, but maybe next month is the month. Maybe next month is where we're going to just start to really take off, along with the rest of the markets, traditional markets. What goes up must come down, and just like traditional markets, we align heavily with them. So we're really hoping for a stock market rally so that we can go ahead and rally with it. I hope you guys are diversifying and pay attention to both traditional markets as well as the crypto space. But that's just my 2 cents. Again, folks, this is not financial advice, never is. But now, that's what's going on with CPI and what that looks like. We were taking a look at some of these charts that seem to be really hot on the Twitter space, and these come from various sources. These do not come from me alone, but of course, I always want to do my own research, and I'm trying to do my very best to diversify that research. Right? It's not that it's just like anywhere else in the space and or traditional markets. You just don't want to pay attention to CNBC or CNN or Fox. You want to go ahead and try and dip your toes into each of it and try and get the pieces put together, because everyone has their own narrative, and it's important to make sure that you're taking a look at all angles, not just match up with what you want it to be. So that's just my 2 cents about that, and I think it's important to make sure that you're trying your very best to do that. Let me go ahead and pull up some of these charts. We got 5 of them here. And the first one is talking a little bit about accumulation. Let me just make sure that you guys can see that. Now, what we're looking at here is the chart. Since this is a weekly candle, right? So these candles are weekly, and as you can see, 2021 we hit our highs. We hit that late August, and then it's been pretty much down from there. Now we did rebound in late 2020. Call it November was kind of real low, and then in December, January, we started to creep right back up. Now, this chart I find interesting because it's basically it's giving you a roadmap. This is kind of what you should be expecting to do as the trend continues into specific ranges. Right now, what they're saying is we are in the accumulation phase. And as we approach, call it 31, 32, let's say 32, 33, you're going to want to go ahead then and eventually do nothing. Um, and as it starts to play out in the 3,400 to 7,500 range, call it 80,000, sorry, 75,000, 80,000 range, you're going to want to then eventually start to scale out as it approaches 85, 90, 100, etc. Kind of like this, it kind of gives folks an idea on the possible potential. As to me, is this is a FOMO chart. It is the one where you're trying to get folks excited about it because there is that potential. As we saw it early in, uh, call it 2020, according to this chart, it was running just under almost 10 grand, call it 12,000. And it spiked up pretty darn good all the way up to 54, 55, 56, 57, 58, depending on which chart you're looking at. And then, of course, that slow grind back down. But happened once, twice, three times, four times. This is about the sixth, seventh, or eighth cycle where we've seen it kind of have that significant increase. Frankly, I feel like we kind of almost see it year over year, but it's kind of where we are, and I do like the chart, which is why I wanted to bring it up. Now, next chart talks about the trend line. Now, this trend line, as you can see, this goes back. This is really only this, call it this year, right? Trend line starts right at January, and it rises up. Now, trend line is your friend. Trend is your friend. Well, until it's not, until it doesn't validate. Now, there's a lot of folks out there that tell you that trend lines are really what you want to be paying attention to. And there's a lot of folks out there that tell you just the opposite. I would say that this is nothing more than a tool, one of many tools in your arsenal that you're going to want to go ahead and pay attention to. Now, again, of course, none of this is financial advice. I've said it once, I've said it twice. Let me say it a third time. None of this is financial advice. Anything that we say here is kind of just for your entertainment. And hopefully you get some value out of it. But trend line is your friend until it isn't. As you can see, that trend line continues up. And what this is more about the FOMO. The hope is that as this continues to trend up, we're going to go ahead and see a bounce off this trend line, and it's going to go ahead and continue on up and ride this into eternity. We'll see what happens here, folks. But another one of those FOMO charts for you. I think this is more or less the reality of it all. What we're seeing here is we're seeing a fairly significant resistance at the resistance right here at the 29.8 mark. Now, the thought here is if we can break this resistance, then we can continue on with the uptrend. But we continue to keep bouncing off of it once, twice, thrice, and we're not breaking right through it. We've had some retracements as it continued up into the beyond the 29.8, and it just seemed to have come right back down. I don't know that this is FOMO or FUD, but I can tell you that the reality is we do need to get above this resistance level to start to see more upward trend. Now, it's possible that we continue to bounce off of this and we continue down, but I will say that the more times we touch this, the better chance we have to start to break through. So, another trend line here, but this is more sideways, and it just needs to break that 29,800 to start to break bullish. Now, here's another one, and we have this kind of shows where we've hit some significant moving averages. We show here where it hit a golden cross back in February. where the 50-day moving average breaks the 200-day moving average. And there's ever since then been a fairly significant upward trend. Now we're starting to see some major support right around what we were talking about, and that's right around the 2,800 mark. Call it 28.5. And I'm just going to go back to this one real quick because we do need to get above 29.8 to start moving forward. So we're kind of stuck a little bit between 29 and 31. We continue to bounce off, call it 28 and 31. And we need to get off of this line and break upwards. But overall, this was actually done by Crypto Hydra and did a good job kind of explaining. And it looks like they were using TradingView to kind of show some of the technicals behind why we will be hitting an upward trend moving forward due to strong technicals of the moving average and some major support found in the 28 to 2900 range. So, last one we got for you. I love this one because this is another one more of those roadmaps, right? It starts to talk about where each of the halvings were going back to 2012, 2016, 2020, and then, of course, next halving in 2024. And every time we hit that pre-bull right before the halving, we start to see an uptick. And right at that moment, that's when the bull run starts to take off. So we're halfway through the pre-bull as they listed here, and there's a number of reasons why you want to invest now. Now, I'm a Bitcoin bull, and we want to make sure we're sending the right message out. Now, of course, I'm biased by almost every stretch of the imagination, but I do see the future here. There is no stopping Bitcoin. There's no one that, or no single entity and or government or governments that are going to be able to take it out. Crypto adoption is bigger now than ever before. And that's one of the reasons why you want to get into it. It's only going to get stronger moving forward. Now, of course, crypto ETFs are potentially coming. We have a whole lot: Fidelity, BlackRock, just to name some of the big boys. But realistically, I think there are over a dozen ETFs that need to really start to get approved this year into next. And time is running out. So TikTok goes the clock, and eventually they are going to have to get approved or they're not. So more to come with that. And of course, we got the halving coming in April. And halving just means that as we continue to have, the computation becomes that much more difficult, and therefore mining becomes that more difficult. When you compare it to the computing power that's currently being pumped out and increased year over year, this halving will prevent us to completely mine all of Bitcoin, well, for decades. So decades upon decades, folks. We're not talking the next 10 years, 20 years. Unless we make some very significant advances in computing power, we're talking 50, 60, 70 plus years, if not more, to mine all the Bitcoin that's out there. Now, I think that it's not far-fetched to say that our computing power will have significant gains, but at its current rate, that's what it looks like. And of course, Bitcoin is a great way to hedge against inflation. And as inflation has increased a significant amount over the past year, there's no reason why you would, I feel, in my mind, bet against Bitcoin. Now, that's my 2 cents, folks. And we're hitting the 30-minute mark, and we certainly appreciate you guys tuning on in. We'll be right back We'll see you next week, folks. Thanks, everyone. Peace.